Welcome back to Smart Stock Sam, and today we are diving deep into NIO. Not just the stock, not just the chart, but the entire picture. The technicals, the fundamentals, the smart money moves, and a product launch cycle that could light this thing on fire. By the end of this video, you'll know exactly where the opportunity sits, where the risk lives, and what to watch over the next 30 days. Let's get into it. Right now, NIO is trading around $6.21, consolidating after a spring rally. And on the surface, that might feel uninspiring. But before you scroll past this one, let's talk about the number that changes the entire conversation. For Q4 2025, NIO posted $40.9 million in net income. That is not a rounding error. That is not accounting magic. For the first time in this company's history, it has crossed the line into genuine profitability. For years, the entire bear argument rested on one foundation. NIO will run out of cash. That case just died, and we are sitting here at $6.21 at a high-risk, high-reward setup, testing critical support directly before the most aggressive product cycle this company has ever attempted. There is one hidden metric we are going to come back to that explains everything about the stock's recent weakness. But first, let's understand why the price pulled back from its $7 highs when the fundamentals just got better. Is the pullback a warning sign, or is it actually a gift in disguise? Let me break it down into three distinct buckets. First, profit taking. When a stock rallies from $4 to $7 on a profitability milestone, institutions rotate. That is just how the game works. Second, sector competition. Huawei-backed IDO, Zeekr's 8X and 9X models. These are applying real pressure on the premium SUV segment. Competition is intensifying. And third, macro uncertainty. Broader geopolitical tensions have kept NIO lagging behind tech-heavy indexes. But here's the critical thing to internalize. The business hasn't changed. Only the sentiment has. And if you look past the red candles and into the actual data, the technicals are starting to scream that this sell-off is running out of steam. Check this out. The 14-day RSI is sitting at 34.75. Anything near 30 is considered oversold territory. We are approaching a sell exhaustion point. Yes, the MAS ED shows bearish momentum at negative 0.094. Yes, we are currently trading below the 5-day, 50-day, and 100-day moving averages. But here is what that combination actually signals in the context of improving fundamentals: a coiled spring effect. When price falls below its short-term averages while the company's underlying business is accelerating, that compression tends to release violently in one direction. And the structural pattern forming on the larger time frame? That tells an even bigger story. Could this chart be quietly setting up one of the most powerful technical patterns in the market right now? Let's zoom out from the daily noise. We recently saw a golden cross, the 50-day EMA crossing above the 200-day EMA. That is a textbook long-term momentum shift signal. On top of that, we are watching a massive cup and handle pattern take shape. The bottom is rounded. Support is established at the 200-day SMA of $6.15, and the upper boundary sits at $8 even. If NIO breaks that $8 resistance, the measured move targets a breakout all the way to $11.65. That is a potential 87% upside from current levels. $6.15 is the line in the sand for this trade. Now let's talk about the fuel inside the engine. $12 billion in total revenue for 2025. That is a 33% year-over-year increase. But the number I want you to lock onto is vehicle margins, sitting at 18.1%. In an environment where Tesla has been slashing prices and watching its margins compress, NIO is actually expanding theirs. They carry a $6.6 billion liquidity buffer. That is not a company on the edge of collapse. That is operational runway to survive downturns and fund the next chapter simultaneously. And NIO is no longer just selling electric vehicles. They are selling an ecosystem, battery swapping infrastructure, premium service subscriptions, and a software layer that is only getting deeper. Smart money already sees this. Would you be surprised to know that over 453 institutions currently hold more than 320 million shares? Let's talk analyst sentiment, because the split itself tells you something important. Weiss rating sits on the bearish end at $5. Nomura, however, just upgraded their target to $8.60, citing the outlook for the new ES9 and Onvo models. HSBC is sitting at $6.80. The average consensus lands at $6.80, already higher than today's price. Simply, Wall Street suggests the current price of $6.21 is perfectly aligned with intrinsic fair value. You are not paying a hype premium. You are paying for what the company is actually worth right now. But what happens when the company suddenly becomes worth a whole lot more? That is what the next few weeks are about. April 24th, NIO launched the ES8 Mirror Black Edition, celebrating 100,000 units delivered in record time. April 28th, this is the big one, the Onvo L80 launches. This is NIO's entry into the high-volume mass market. Think of it as their Model Y moment, targeting the $30,000 segment at scale. Then early May brings the delivery numbers. Late May delivers the ES9 high-end SUV. This is not a slow rollout. This is a full product blitz, designed to capture every market segment from $30,000 to $80,000 simultaneously. And buried inside these new vehicles is a technological edge that their competitors simply cannot buy at any price. Most EV companies purchase their chips from third-party suppliers. NIO decided to build their own. The Shenji NX9031 is a proprietary 5-nanometer custom chip, delivering 3 times more processing power than the third-party solutions it replaces. It is entering mass production right now and being integrated into the Onvo L90 refresh. Why does this matter so much? Because it gives NIO what Apple has with its M-series chips, the ability to optimize its autonomous driving software directly to its own hardware. Vertical integration at the silicon level is how you build a moat that competitors cannot replicate by writing a check. This is the system capability advantage that NIO's CEO William Li keeps referencing. And now it is becoming real hardware in real cars. Now, who is actually putting serious money behind this thesis? Aspex Management recently added $266 million. WT Asset Management added $142 million. 453 institutions are already positioned. Meanwhile, retail sentiment reads as neutral, but message volume has spiked 162%. Something is getting attention. And there is a major domestic catalyst in China that is quietly accelerating EV adoption all over again, rising gasoline prices. The retail crowd is waking up. But here is the thing, the institutions have already been building their floor, and there is a group on the other side of this trade that could end up in serious trouble. 137.9 million shares are currently sold short. The days to cover ratio sits at 6.23. That is an exceptionally high number. What does that mean in plain English? If NIO's May delivery numbers beat expectations, shorts will be forced to cover their positions into a market that doesn't have enough liquidity to absorb them cleanly. That is the definition of a short squeeze setup. And when you layer a 6-day cover period on top of a major product launch like the L80, the upside moves that can follow are not gradual. They are violent, they are fast, and they reward the people who are already positioned correctly. The options market is already casting its vote. There is a 79% bias toward calls for the May 1st expiration. The resistance wall shows heavy open interest clustering at $6.50 and $7 even. Those are the ceilings the market is waiting to crack. On the downside, put support sits at $6. The market is essentially pricing in a defined range and saying, we don't think it breaks below 6, but we need a catalyst to blast through 7. That catalyst is arriving in days. So here is the actual blueprint. The ideal entry zone is between $6.15 and $6.21, buying the bounce off the 200-day SMA. $6.15 is your line in the sand. If that holds, the trade is alive. Your first profit target is $6.80, aligning with the analyst consensus. If momentum continues and the short squeeze triggers, the secondary target is $8.60, Nomura's bull case. You have an immediate gap fill at $6.37 to clear first, but once you clear the 650 options wall, the path to $7 opens significantly. Now let me be direct with you. What are the red flags to monitor? For the next 30 days, watch two things: the conversion rate of Onvo L80 pre-sales and the early May delivery numbers. If those miss, the squeeze does not trigger. For the rest of 2026, the long-term monitor is profitability defense. NIO must maintain vehicle margins above 15%. And if they can sustain that, while expanding into Europe through their Firefly sub-brand, the long-term bull case becomes very difficult to argue against. This is not just a quick flip. This is the transition of a great tech company into a great automotive company. Before we close, I want to be clear. Nothing in this video is financial advice. I am not a licensed financial advisor. Everything discussed here is for informational and educational purposes only. Always do your own research, consult a qualified professional, and never invest more than you can afford to lose. Markets carry risk, and past patterns are never a guarantee of future results. The bottom line is this: NIO is trading near intrinsic value while sitting directly on long-term technical support. It is entering its most intensive mass market launch cycle at the exact moment it has proven profitability for the first time in its history, a $40.9 million net income baseline, a $6.6 billion liquidity buffer, 137.9 million shares short, and a product blitz arriving within days. The asymmetry of this setup is hard to ignore. The floor is established, the profitability is proven, the triggers are imminent. NIO is not just a trade right now, it is a strategic investment at a genuine inflection point. Here's my question for you in the comments, and I want to hear a real answer. Do you think the Onvo L80 launch is NIO's true breakout moment, or is the premium brand loyalty too strong for a mass-market sub-brand to ever fully deliver? Drop your take below, because that conversation is worth having. If you found this breakdown valuable, please hit that like button. It genuinely helps this channel reach more investors who are looking for this level of depth. Subscribe if you are not already, because we do this kind of full-stack analysis every week. And if Smart Stock Sam has ever helped you see a trade more clearly, consider sending a super thanks using YouTube's support feature. It goes directly toward keeping this content free and independent. I'll see you in the next one.